Hey, this is Professor G. We are going to jump into week 6. Yes, we've only got 3 weeks left before the class is over. So this week our big item is project number 3, which is just a soft jump into financials for start. What is the significance of financials in the realm of startup or new ventures? First and foremost, you've got feasibility. Is your idea, is your business model something that could work on paper? If we can't make the financials work on paper, we can't make them in real life. Now, there's no guarantee that if we make the financials work on paper, that your venture will be successful, but we're not even going to start if we can't first prove that you don't have more revenue than cost on paper. The other thing that it does is when you're looking for help and investment from others, whether it's their time, resources, or money, your work in the area of developing financials serves as like evidence of your commitment to the venture. If you're asking for somebody to invest $100,000 into your startup venture, that's $100,000 of their money. The expectation is that you're going to put a lot of your time into this venture. And so to the extent that you develop the financials, that's evidence of your time commitment. Also, there's no guarantee. 95% of these startups fail. So if I were an investor and before I write you that check or give you that money, you make me feel a little bit more confident in doing so when you have put in some time into the financials. Financials are work. I work with a lot of young people who want to start new ventures, startups, all different types, profit, nonprofit, etc. Very commonly, students don't want to do the financials simply because they take some work. You've got to research, what is appropriate for my specific industry. So if you're going to open a restaurant, you can go online, you can find a lot of financial information about like the average cost per square foot to operate a restaurant that's actually out there. The whole idea that I want you to come away from this slide is that you do not have to have a background in finance to do this work. Finance isn't about math. It's not even about numbers, really. It's a language. And so we're going to jump into some of that language. But this is, probably the best thing I can show you. Conceptually, if this is year 1, 2, 3, 4, 5, 6, 7, 8, we want to show growth from year 1 to 8. That it's called like a hockey stick. When you're swinging the stick and it curves up, that's what we want to show with our financials, but it's got to be credible. When we look at revenue, so on the financial statement that you're going to be doing for Project 3, you'll see it behind here in the background. There's a section here. It's line 7, okay, and that's revenue. And what you're doing is you're estimating revenue for year 1, 2, and 3. Year 1, first year in business, not going to have a lot of sales, etc. What would you like to do in year 2 and year 3? And we want to see some type of growth there. So what is revenue, first and foremost? Revenue is money that is generated by startup, a new venture. Both profit and nonprofit have revenue. Okay, there's no difference between the two in terms of revenue. Revenue is gross, meaning that it is the total dollars in. There's no deduction for expenses or cost. Okay. In note A at the bottom of the financial statement, you're going to describe your source of revenue. Was it product sales? Was it services rendered? And give us an idea of like how much, if you sold 100,000 t-shirts at $25 each, etc., something like that, just some detail. Cost of goods sold. This is line 10 on the financial statement that you're going to fill out. Okay, so let's jump over here. If you sell a custom print t-shirt for $25, $25 is the gross revenue, the total, but you had to purchase the blank t-shirt for $10. The $10 that you paid for the blank t-shirt represents the cost of goods sold. The t-shirt cost you $10 and you sold it for $25. So estimate your cost, your COGS, for years 1, 2, and 3. As you sell more, your costs increase because you sold more t-shirts. Wages. Pay yourself. Very often young people will state that, and actually I've seen this in real life situations where they're investing or pitching their business to investors, and they'll say, well, for the first year, I'm going to put 100% of everything I make into the business, and I'm not going to take a penny. And they think that's actually attractive to investors. Investors actually never want to hear that, because what that means is you're going to have to get a second job or a third job, and you're not going to be given 100% of your attention and time to this new venture. So always pay yourself in these financial projections. So you've got wages here, line 11, year 1, 2, and 3. But you might have others working for you, and that's okay, and that increases the wages. So make sure you pay yourself and actually say that in a pitch competition if you're going through the financial detail. Rent. Okay, if you have a brick and mortar location, line 12, then you'll want to put in the rent for 12 months. If you grow your size in year 2 or 3, increase the rent. But if it stays the same, it might be $1,000 per month. Multiply that by 12, gives us $12,000 in each one of these years 1, 2, and 3. If you have no brick and mortar, so if you're a virtual or online type business, e-commerce, then simply put in 0. Utilities. What are utilities? Okay, we have lights in buildings. That's electric. We have air conditioning. That's electric. We have water that we use. Okay, and we have sewer. All of those are cost, and those go into line 13 or the utilities section, and we estimate that for 1, 2, and 3. How do you figure this stuff out? You can actually, if you have a brick and mortar location, this applies. If you don't, enter 0. But if you have a brick and mortar, you can go online, you can just Google or ask a search engine, average annual cost utilities for a restaurant, and it'll pop up. General administrative, you're going to leave that blank. You're going to insert 0 for line 14. We don't need to do it. This is actually the financial statement that we use for the New Venture Challenge here at Central Michigan University. General administrative is kind of like a general miscellaneous. If we've got these odd expenses that we can't put anyplace else in the financial statement, we put them in here. Marketing. You're going to have to spend some money to make money, and that's marketing. So how much in year 1 are you going to market? Line 15 here. This one, I don't really like this, 5, 55, and 650. I think you need to, as you increase revenue, you need to increase your marketing proportionately to ensure that you continue to grow and you don't flatline. So estimate that for years 1, 2, and 3. Line 16, other cash uses from operations. Just put in zeros for the purposes of this exercise. It's beyond the scope of what we want to do. Estimated income tax. The reason this is in here is we want you to keep in mind, you do nothing here. This isn't automatically calculated. The gray data fields are automatically calculated by the spreadsheet, so do nothing there. Don't put a value in there. We just want you to keep in mind that when you run a business, you pay tax. And so based on the values you put up here, it will estimate federal income tax that you might owe. So don't do anything there. Leave it. Just let it self-calculate for all the gray data fields. Capital expenditures. A capital asset is something that you purchase. If you're a restaurant and you need to purchase an oven to cook, that is a capital asset, a capital investment. If you purchase a computer to run your home business, that is a capital investment. So what do you need in year 1 to start up your business in terms of those types of expenditures? Usually it's higher in year 1, or maybe you just got a bare minimum income or revenue year 1, and you start with one computer and then you start adding a 3D printer and other stuff. All those are capital expenditures. So just estimate what you might spend in years 1, 2, and 3. Starting cash balance. We are going to leave that blank. That would be if you started a business in real life and you invested $10,000 of your own, we'd put that value in there. But for now, you're just going to enter 0 right there. Cash flow. Do nothing here. It's a gray data field. It will calculate itself. Ending cash balance. this is what we're working towards by entering in the data fields, completing the data fields here. We're plugging data in and coming down to 83,738 gross revenue. The amount of money we have left, that's after we paid ourselves a little bit of money, is $2,988. At the end of the year, we have this amount. At the end of the year, we have this amount. These dollars in here aren't representative of anything, so don't worry about that. If your dollars vary, that's completely okay. This is just a soft introduction to get you thinking about the significance of financials when you're starting up a business. Please feel free to reach out to me for help. I'd be happy to do that. Thank you.